I've been exploring flood reinsurance, but I have some questions about the more advanced concepts. Can you help clarify?
Absolutely. Flood reinsurance is complex because floods are unpredictable and can cause widespread damage, often resulting in multiple claims from a single event. Factors like climate change, urbanization, and inadequate drainage systems contribute to the increasing risk, so reinsurers need to carefully assess these risks using data analytics and catastrophe models.
Why is flood reinsurance more challenging than other types?
Floods are highly location-specific, affecting large areas. The frequency and severity of floods vary, and reinsurers use models that analyze historical data, rainfall patterns, river flows, and topography to estimate potential losses. These models help predict the probable maximum loss, PML, for a major flood event.
How do insurers manage this risk?
They use a combination of proportional and non-proportional reinsurance. In proportional reinsurance, the reinsurer shares a percentage of premiums and claims. In non-proportional reinsurance, like excess of loss, the reinsurer covers losses above a certain retention point.
How does climate change affect flood reinsurance?
It's a major factor. Climate change increases both the frequency and intensity of floods. Reinsurers adjust their models to account for these changes, often leading to higher retention limits or increased premium rates in high-risk areas, such as coastal regions facing rising sea levels.
Is flood reinsurance available worldwide?
Yes, but the structure varies by region. In the US, for instance, the National Flood Insurance Program (NFIP) plays a big role, supported by private reinsurers. In Europe, flood risks are often covered through public-private partnerships, while in developing countries, reinsurance is critical because government support is often limited.
How do reinsurers decide how much flood risk to take?
They assess their capacity and examine the insurer's portfolio to determine the level of exposure. Reinsurers set retentions and limits based on geographic concentration and the likelihood of severe floods. For large portfolios, they might use stop-loss reinsurance to cap their total exposure.
So, stop-loss reinsurance helps limit the total annual losses from flood claims?
Exactly. It prevents reinsurers from being overexposed to aggregate losses from multiple flood events in one year. For instance, if an insurer is heavily exposed to flood-prone areas, stop-loss reinsurance can cap the total claims that reinsurers pay.
Are there any innovations in flood reinsurance?
Yes, parametric reinsurance is gaining popularity. Instead of paying based on assessed losses, payouts are triggered by predefined conditions, such as a certain rainfall level. It speeds up claims settlement and is especially useful in areas with poor claims infrastructure.
Is parametric reinsurance becoming more common?
Yes, especially in regions where traditional loss assessments are challenging. It provides quicker liquidity, helping governments and businesses recover faster after a disaster.
This discussion has been really insightful. Flood reinsurance seems intricate, especially with climate change and the use of advanced modeling.
It is, but with a solid understanding of risk assessment, modeling, and reinsurance structures, you'll be well equipped. As flood risks evolve, so must our approaches to managing them.